So good afternoon, listeners. I'm Hannah Vickers. I'm the Chief Exec of the Association for Consultancy and Engineering. Welcome to our webinar this afternoon, looking at how you might use R&D tax credits. So this is the third episode in our series of webinars, all about helping businesses work their way through COVID-19 and the planning and how it's impacting on your business. We've covered a number of different things. We've covered business loans, we've covered job retention schemes, and today we're looking, I would hope, a little bit more positively at R&D and how the tax system supports that. Now, everything that we are going to be doing today is going to be recorded, so you're able to replay this. You'll also be able to send a link of this to your contacts, to your colleagues. So if you want to share some of the insights and the learning that we have, some of the questions that we answer today, then please feel free to do that. I should say now that although this is an ATE webinar, it's going to be open to everybody in the construction industry. So if you're not one of our members, but you're in a different type of business, you're still very, very welcome to join us. And you will have the same access as our members do in terms of playing this back. So in terms of what we're going to look at today, we've got three parts to the presentation. So I'm going to be joined by some of our colleagues from Forrest Brown who work with ACE on this, so to work to offer advice from our members. I'll introduce them shortly, but just hold your enthusiasm. I'll just do a bit of an introduction about the purpose of today's webinar. So we know, and I'm sure most of you on the call will be aware, that you can claim tax credits for research and development activity. The reason that we thought that this was very relevant and timely to do this webinar now was actually around thinking about how do you use R&D tax credits as a form of cash flow, making sure that you are being able to getting your claims through so that you can support the cash flow in your business, which might be a little bit more uncertain, a bit tighter over the next few months than it has been historically. So there's that function as a kind of immediate business support. But actually, I think, and perhaps more importantly, that there is a real opportunity here to reassess what you're doing in terms of research and development. So both in terms of, perhaps what you're going to be planning to do over the next few months. So giving you a good understanding of what the tax credits might be able to do to support R&D activities that you might want to put into your planning. Perhaps you've got staff that are currently on furlough, might be coming back to work, and you're thinking about what could you redeploy them onto? How can R&D form part of your company's recovery plan from this period of disruption? So hopefully we'll be able to give you a bit of advice around what would be eligible, what you'd be able to claim back, so that that can inform your planning. And then secondly, I'm going to go a bit cliche here and say we're in unprecedented times. So a lot of what clients are asking of us, a lot of perhaps what we're needing to do is to work in a different way, be more innovative, whether that is sort of reactive to clients' demands or the fact that you spot an opportunity because, for example, you're going to have to think about design on site from a social distancing perspective. All of that, creativity, all of that innovative thinking potentially gives us a bigger scope because more of what we're doing will be innovative, could be classified as research and development. So with both of those in mind, we thought it's very timely to bring some experts in, which I am not. I should warn you that I will be facilitating today. I won't be presenting, but I will be taking questions. So just to give you a heads up, if you haven't been on one of these webinars with us before, you'll see in the right-hand side there's a sort of chat box, questions box, so you can type your questions in at any point. So we'll have the presentation shortly, but at any point just type your questions in, and I will allow some time at the end of the webinar when we'll field those questions to the experts to try and get you some answers. So that could be something specific to your business. It could be just something that you wanted a bit more clarity on. We're not, very open here, so all questions are good questions. Please do send them in at any point, and we'll come to those at the end of the webinar after the presentation, and I'll ask the questions. So I think you've probably heard enough from me. If I just introduce our experts, so we've got, as I said, some colleagues from Forrest Brown joining us, going to give us a presentation. So I'd like to introduce Adam Kotas and Gareth Randle, who are going to just talk us through and then take some questions from the audience at the end. So over to you both.
Thanks, Hannah. That's great. Hi, everyone. I know Hannah said she's not an expert, but that was a really great summary, Hannah, of why this is particularly important at the moment. And so thanks for having us here today to talk about R&D credits. And I think, you know, this really is a powerful funding source for ACE members. It's something we're really passionate about, and I think it's something that's having a really fast but sort of meaningful impact to UK businesses at the moment. I was looking back before this webinar because I wanted to sort of put in context. Hannah, you mentioned about this being, you know, something that can really provide cash for businesses. So I looked back and said, well, how has it provided cash just from our point of view for clients that we're working with? And since lockdown started, we've delivered over £23 million for clients in R&D credits. So if we think about that, that's 23 million of what's essentially government funding to UK businesses just in the last sort of 6 weeks or so. And that's really, really crucial at the moment. And so over the next 20 minutes or so, we'll want to get into some details of R&D credits. I really want to emphasize here that if we look at the government-backed stimulus measures that we've got at the moment, R&D credits clearly are an existing provision that the government are really trying to make sure that people are aware of at the moment. And they are very definitely not loans. You do not have to pay the money back. And so being used alongside other stimulus measures, it makes it a really powerful time to be taking another look at this. So we've worked with lots of engineering businesses for many years, including a number of ACE members. Gareth is here as well today to provide some input from the technical side of things. I'm a chartered tax advisor and director here at Forrest Brown. Gareth, can you just sort of introduce yourself, give a really quick background?
Yeah, hi everybody, and thanks, Adam. Yeah, just from my background, I'm part of Forrest Brown's technical team, and my background is as a civil and structural engineer for the last 20 years, and I joined Forrest Brown to look to promote innovation in industry and see about avenues for yeah, well, exactly that, promoting R&D and innovation and seeing what's new and cutting edge, and hopefully seeing that benefit being served back into the industry.
Thanks, Gareth. Can we move on to the next slide, please? Great. So today we're just going to cover how R&D tax credits work, type of work that qualifies, activities that many of you are very likely to be engaged in on a day-to-day basis, and also the process for submitting an R&D claim. We know at the moment how important it is to make sure that cash is in the business, so we're going to give you an idea of timescales and the process. And finally, you know, there'll be lots of people who are already claiming R&D credits. You know, we see lots of people at the moment taking a second look at cash generative activities within the business. R&D credits is certainly one of those. So we're going to provide a bit of guidance on how to sense check the claim to make sure that there isn't any funding being left on the table. So this first part, how to access your R&D credits quickly and accurately. James, can we just move on to the next slide, please? Thanks. So a bit of background here. The credits are an established form of government funding. This started way back in 2000 to encourage private sector investment really in technical jobs, expertise and development of companies in the UK. Right now, you know, these R&D credits are a vital source of funding for business. If you look at the statistics that HMRC publishes on this, they say that for every £1 that's given away in R&D credits, up to £2.35 is stimulated back into the UK economy. And right now, you know, certainly in our discussions with HMRC, the government sees this as a way to continue to invest back into the economy and support the recovery from the current situation. So companies being able to claim R&D credits while we have things like people being furloughed, looking at it in conjunction with business interruption loans, looking to increase support through the R&D claims is something that is absolutely vital and really important to make sure it's done efficiently and quickly. So that's great. If we can move on to that slide, there's a couple of things I want to cover here around why we're still seeing companies not looking at R&D claims. I think since R&D credits began in 2000, there's been a number of misconceptions. Certainly, Hannah talked about changes in approach, client requirements, but ultimately, calling the credit an R&D credit can create some misconceptions. And some of the myths that we hear most often are shown on the screen here. And this often links to why identification that you might be doing activities that can qualify as R&D and therefore make an R&D credit claim can often be missed. If we look at myth one, you know, I'm just doing my normal job, that's not R&D. This is something that we come across time and time again, and particularly because people are solving problems every day as engineers, and therefore things can start to feel commonplace and they can start to feel like they are an everyday part. It's not clear how that can be considered research and development. So really crucial one to understand the technical nature of the R&D activities and make sure that people don't just think this is part of my normal everyday job. Now, looking around this slide, some of the other parts that we see as preventing people from really looking at this as much as possible are related probably to process. It's always going to be really important consideration how we juggle disruption from normal routines. Gareth, just thinking about sort of myth 4 here on screen, do you want to just explain a bit about how we see this coming about?
Yeah, will do. So yeah, myth 4 being claiming is too much like hard work and not worth my time. And this is unfortunately one that we hear quite a lot, but in our experiences, businesses should never really feel like the process is too onerous. Unfortunately, there's a tendency of certain R&D tax credit advisors to leave a lot of the preparation work to the clients, for example, by asking them to fill out their own spreadsheets or write up their own project case studies even. And what you should really do if you've been asked to do that is consider raising a bit of a red flag that you're having to commit too much of your own time to putting in these claims. And I think also very importantly, if that's happened, then you might also consider that your claim might not have been prepared correctly.
Thanks, Gareth. So there's a couple of other misconceptions here, which we'll cover as we go along through this. I'd like to just look now at the next slide to consider what does the government say actually qualifies as R&D, and here's the official definition on screen. We know that the R&D guidelines can be quite hard to navigate because some of the definitions can be a bit uncertain and a bit confusing. You'll see on screen that the official definition states that R&D takes place when a project seeks to achieve an advance in science or technology through the resolution of scientific or technological uncertainty. And this is a really broad definition, purposefully broad, so that it can apply to all different sectors. But it does mean that it can create some confusion in terms of what it actually means. On the next slide, we've just tried to break this down really simply. So let's think about that definition in more like layman's terms. And this is definitely not technical language, but when you're looking as engineers, as consultants at projects that you're working on, whether they are internal projects in terms of developing your expertise and processes, or projects that you're working on with clients, do you come across head-scratching, complex technical challenges in your projects? And certainly we see from our clients that often that's the case within this industry and the type of work that you're doing. And secondly, are you using your technical expertise to develop and perhaps deliver solutions? And I think potentially that makes it a little bit easier to understand what we're really looking at as a starting point to say, are these the type of projects and activities that may qualify for R&D? Gareth, would you be able to just maybe expand a bit on the sort of triggers that you see as other identifying factors?
Absolutely, and I think you've touched exactly on it there. That there's another angle to come at this and look at those areas that that could be triggers for your R&D. So normally you'll find that these would be associated with things like costs in particular, time constraints, often changes in legislation. You might have unique site or project restrictions. And as a simple example, but if on any of your recent projects, perhaps you've tried to achieve the same outcome as a previous project, but in this instance with a noticeably lower budget, for example, or if you've faced an unexpected challenge on site that's taken you back to the drawing board to develop an alternative approach. It's these type of problems, especially when for you, I mean, yes, it is, as an engineer, you're a professional problem solver, really, essentially. And if you, as somebody who's been in the industry for a number of years, you are, excuse me, professionally registered or one of the senior engineers, and if you who've been around the block a number of times and you've seen this, you've seen all the routine solutions, and yet you're still struggling with this particular challenge that you have, there's a very good chance that you will have to go through a bit of a spiral of R&D to actually resolve this situation.
Yeah, thanks, Gareth. That's right, and it's particularly relevant at the moment, as we discussed earlier on, that clients are looking for ways that they can be more innovative. Certainly, companies are looking at how they can support clients potentially in a changing environment in a more innovative way. And so those types of technical challenges, whether in process or projects, are becoming more and more relevant. So trying to always simplify what it is that can qualify as R&D. On the next slide, we just want to take a look through what the process looks like in terms of making an R&D claim. We've got up on screen an example of a typical time frame for making a claim. I would just raise here that this is quite a sort of complex, nuanced area of tax, governed as it is by a set of guidelines. So really important just to make sure you're taking advice on making the claim here for two reasons. One is claiming the correct amount, and when you're taking a second look at things at the moment, really important to identify that you are going to be claiming the correct amount. And secondly, making sure that the business is protected from risk by having supporting information and documentation all as accurate as possible. The other reason I think that you want to make sure that you have some support here is you're managing the business, you're running the business. You don't want to be focusing all of your time on making an R&D claim. So if I think about the typical time frame that we would see, usually 4 to 6 weeks for starting to share data and prepare an R&D claim. We know that businesses more than ever are relying on the R&D credits, so naturally we're working around the clock to accelerate this process. What we've seen over the last few weeks is that HMRC are consistently meeting the deadlines for paying out R&D credits, and for credits they're looking to pay within 28 days. For lots of our clients, that they are achieving that. And so if you think about the timing of preparing and making an R&D claim, if you accelerate the process for preparing the claim down to just say a couple of weeks, and HMRC can repay you cash within the business within the next 4 weeks, you can be looking at a cash injection into the business within 6 weeks, which I think is really powerful at the moment. So on the next slide, I think while it's important to know that you can prepare the claim quickly, something that Gareth touched on and something we find really important is what's your time investment as a business. Now, we're seeing a whole host of situations at the moment. We're seeing people focusing very much on their business and saying, I am absolutely flat out with just managing what we're doing at the moment. And we're seeing others saying, I've got a bit more time to focus on this at the moment, while some of the projects have gone a bit quieter. So we've set out here, what does it typically look like? Your involvement will tend to vary according to how you're working and what support you get, but we would generally say that a time commitment of around 8 hours across the business would be pretty reasonable, and that's your time in total. So some time for our technical team to talk with your engineers and your technical staff, and then some time for the finance team to communicate with our tax and accounting experts. That's a pretty good summary of what we would expect. Naturally, that will vary depending on projects and people involved and how many need to be in the process. So on to the next slide. How much could the incentive be worth to the business? This is clearly a key part. For those who are already claiming, excuse me, naturally you will see the benefit that this can deliver. We wanted to try and simplify here so that we can really help people understand that cash injection that could be into the business. What could that be worth? So if we just move on to the next slide. Now, this example is related to a company with less than 500 employees, and I'll explain the difference between the benefits that can be created. But if we just look really quickly, if there was a business with just 12 staff involved in the business, we're looking at this example and saying, imagine that the payroll costs are £500,000 across those staff, and that a business could qualify that 10% of the time was spent on R&D. Now, a really simplified example, that would mean that we'd be saying £50,000 of qualifying cost during the year would be relevant for this. Under the R&D rules, a business can receive up to 1/3 of this cost back as cash into the business. So a simple example, just showing a business with 12 staff could receive just under £17,000 back into the business. Remember that a business can look back 2 years when they're looking at making an R&D claim. So could be looking at receiving £30,000 to £35,000 back into the business quite quickly. Now that scales up as investment into qualifying activities increases, and therefore there's an example here of a business that spends £1 million on R&D receiving over £300,000 back into the business. For companies that have more than 500 employees, instead of having a benefit of up to a third of the costs back as a cash benefit to the business, the benefit is around 10% of the costs that qualify. So very similar rules apply, but the benefit is a bit lower for companies with over 500 staff. We've got a quick example on the next slide. Gareth, it'd be great if you can just talk through this for everyone, please.
Yeah, will do. And yeah, always nice to get into a good example. And I realize there's a lot of words there, but if I can talk you through it, really, this is an existing client of ours who is an ACE member. They've been submitting great work for a number of years now. I like this example because, well, for one, it's quite relatable to many, but secondly, because it's a recent one of theirs, and it also shows that their success with this incentive is encouraging their ongoing innovation year after year. So this company were appointed as civil and structural engineers for a retail site situated on top of an old coal mine. Good start. They were brought on board fairly late, and they immediately raised a flag that the remediation work proposed by the pre-appointed earthworks contractor was not fit for purpose. However, in classic fashion, the project budget didn't allow for using suitable standard alternatives. So to push things forward, the consultant, at their own risk, chose a proactive can-do approach. They worked to develop and very importantly validate a suitable performance criteria that would actually be achievable using the material that they were dealing with. On top of that, they also developed an accompanying testing regime and a methodology specific to these criteria so that they could ensure that the work was carried out to spec. Now, it wasn't entirely the end of the story for the consultant. The structural team also ended up undertaking R&D work, but overall for the company, which had a turnover of 2.1 million, this claim was worth £92,000 to them. So it just shows you that the costs of being innovative, either by your own choice or being unavoidably pushed that way, don't have to be shouldered by your business alone. This incentive is built specifically for that purpose. And the money's there to use as you wish. In times like these, you might just need the money to keep the business running, or you might want to reinvest it. But yeah, it's there to be used.
Thanks, Gareth. Really useful, and yeah, a good example. So just moving on to the final part of this presentation, just before we see if there's any questions, just wanted to touch on, for those companies already making an R&D claim, how to get more value from the R&D tax credit. I think, you know, we're seeing an increasing number of businesses start to take a second look. Certainly at the moment, you know, identifying how important cash is for the business. So quickly on a couple of areas that we see as really important to this. If we can just have a look at the next slide. There's two main parts I'd like to think about. One is, how do you uncover more value? Because sometimes businesses are missing out on funding they're entitled to. And secondly, what does the process look like for you? Because ultimately, you don't want a process that is challenging and difficult, that comes with risk. That's something that really should be avoided. And ultimately, you want to maximize the value of what's being received through the R&D claims. So, you know, when we look at how we're identifying activities and costs, there's certainly areas where companies are defining too narrowly the R&D project boundaries. That is, therefore, excluding elements of cost that could be included. We might just, for example, see things where they're capturing the design phase of the project, and as there are challenges with actually working on the project further down the line, these are missed. This can happen for a number of reasons, but where there's a format that simply repeats what's been done the previous year, instead of taking a critical look at how that's been put together, then that can mean that those activities that could provide an additional benefit aren't then captured. Gareth, what are you seeing in this area?
I'm glad you asked. I think the trick here is that often what we find on when speaking to clients is that if you look at it, sometimes you're chatting about something that's 2 years ago, and half the time you've forgotten about it, and you forget those little nuances. So having a consultant to speak to who has the industry expertise to call upon, you know, often we'll listen to these examples and these case studies that are proposed to us or presented to us, and because we have that knowledge of the industry, we'll often ask those questions. Hang on, this part of it must have been tricky, and you know, these must have been little subtle challenges that you had along the way that you might well have forgotten about. So I think it's having that combination of having the our tax experts on board, and also having a consultant who has your suitable technical background, I think helps really maximize the claim and really get the subtleties of what you've been doing.
Yeah, thanks, Gareth. Ultimately, the identification that you can make an R&D claim and the qualification of what activities and costs can qualify is absolutely essential. It's something that we see time and time again is worth looking at again, because ultimately that links into the process that you're going through, making that as easy as possible for the business. And you know, if that process is easy, efficient, and simple, you know, the time that it takes to complete the R&D claims and receive the cash back into the business will certainly be cut down. So that's great. If we just move on now to see if there are any questions. I mean, we know that, you know, people as business owners will be focused on the success of the business at the moment, and obviously there's two sides to this. If you're not already claiming, is it worth exploring whether you could be, given the nature of the work that lots of companies here will be involved in? And obviously, if you are already claiming or have been in the past, then, you know, is it worth checking again just to make sure you've uncovered all the value? So thank you very much for listening. And if there are any questions, Hannah, we'd be delighted to answer them.
No, that's brilliant. Thank you. And a very thorough presentation. I really like the examples actually as well. I think that's really helpful to be able to talk through. Makes it a bit more real. If there's anything I've learned over the last few weeks in terms of the rate government guidance has been coming out, it's that you need examples for people to really get to grips with it. So so appreciate you putting those in. So I've got a few questions. We've probably got time for a few more than we've currently got in. So please do send your questions in on the chat function. I've got a couple to start with around eligibility. Now, obviously, you know, we focused and the examples are around engineering consultancies, but just in terms of applicability to some of the other types of businesses. So the couple of questions I've got is, one's, you know, is it applicable to LLPs? And actually, is it applicable if you're sort of an architect or REBA member? Obviously, our examples were around engineering consultants. So can you just give us a bit of an update on those?
Yeah, great questions. Let's think about, so R&D in general applies across a really broad range of industries. Equally, you could have companies in a similar industry who one may have an opportunity to qualify and one may not. So there's definitely some subtleties. Just thinking about the point around LLPs, in order to claim R&D tax credits, you do have to be subject to UK corporation tax. So on the face of it, an LLP would appear that it may not be able to claim. In practice, the situation is quite different, and it depends on the structure of the LLP and whether there are any corporate entities within that structure. When you look quite closely, the way that LLPs are structured varies between them, so it's always worth understanding the structure of the LLP to identify whether there is an opportunity to make a claim. Thinking about the architecture side of things, I mean, this is an absolutely fascinating area, I think, because there's a huge number of architects who we work with to make R&D claims. Interestingly, the projects vary from year to year in terms of intensity of what qualifies for R&D. But certainly the part about REBA was very interesting, because anyone who's sort of familiar with the REBA guidelines and the website will see that it's something that they are actively encouraging members to review whether there's the potential there for an R&D claim, and that support from the government.
Yeah, I think I can add in as well there, Adam. I mean, I had a fantastic chat yesterday with an architect doing some really nice work, and it was their work. They were carrying the financial risk associated with it, but in this instance, they were doing some great work on modular building. But very often in architecture, you're dealing with new building materials, or there might be environmental and sustainability constraints there. If you're quite literally the architect of what's going on, and if you're carrying that risk, then there's plenty of scope for putting in an R&D claim.
Brilliant. Okay, right, we've had a flood of questions, so we'll go through these at some pace, I think. So I've got a question in relation to the different rates that you can attract based on the size of the firm. So the question is that you mentioned the amounts which can be claimed for up to and over 500 employees, and that's different. There's a question about how is that calculated. So in this example, there's somebody who is a UK limited company of less than 40 employees, but a part of a global group which is over and above that. So which side would they sort of come down on in terms of which scheme, which sort of rate they would attract?
Yeah, we see. Oh, sorry, go on.
I was going to say there's a follow-up question around how can they claim in other countries, or can they claim if the work's in other countries? So this is obviously a global firm. So 2 questions in one.
Okay, no, thanks. Two really good ones. We see the first one quite a lot in terms of we're a company here with a lot less than 500 employees, but across the board we would have a lot more. And the answer is, if you are part of a group who has more than 500 employees, it's looked at on a group basis. There can be some subtleties if the ownership of your company is not sort of 100% owned, or a real sort of part of that group. But normally, if you are part of a group, then you have to look at it on a real group basis. So would be likely then to fall into the larger company scheme, even though looked at on an individual basis, you would be an SME with under 500 people for that purpose. On the second one, sorry, Hannah, my mind's gone completely blank. Just remind me of the second question.
So the second one was a bit around, if you're a global firm, are there restrictions in terms of where the work happens? And you might be doing the engineers, or might be working in the UK, but if it's a global project, does that make a difference? So what are the restrictions around kind of global operation of the scheme? Okay,
so more and more, and actually interestingly, for engineers and architects, I would say are the two sort of types of businesses we're seeing this more and more commonly. It doesn't matter where the work takes place. The R&D claim is all about identifying costs of the UK business that can qualify when we look at activities that those costs relate to. So let's unjumble that and put it more simply. If you have 10 people and they're all paid through the UK and they're working on projects that take them worldwide, it doesn't matter where the work is. It matters that they're costs that are borne by the UK company. Now, often where there is a structure that is a bit more complex, a global structure, you can see that the UK company will bear its share of costs relating to a project that it may direct, and therefore you can see other costs included, which might be for people in other parts of the group, in other parts of the world, and there is potentially an opportunity to include those costs in the R&D claim as well.
Okay, brilliant, very clear, thank you. Right, I'm going to whiz through these because you've got quite a few. So the next one is, this has definitely come from an engineer, this one. Does the solution have to be successful?
That's a very good one.
Go on, Gareth.
I'm very happy to take this as well. I mentioned this a lot in calls with clients. It definitely doesn't have to be successful. Failures are equally valid in terms of R&D, and often it's down to the reason that you've attempted to push the boundary. You've tried to find a solution and you just couldn't get there for whatever reason it may be. But the fact of the matter is that you've then trodden that new ground and you've advanced that knowledge that's out there in the industry, and you're able to then you may, if you choose to, document those findings or just carry that forward and say, well, on a future project we tried this but it didn't work, so perhaps this opens up a different avenue. So yeah, please don't ever consider failures in a particular R&D exercise to be a hindrance. It's very much valid.
Okay, so I guess it's all about learning, isn't it? You can try it, didn't
Absolutely.
work, but you can learn from it.
Exactly, and that's the whole thing with problem solving. You can't be scared of failures. You have to just proceed. So yeah, it won't count against you.
Yeah, and specifically catered for in the R&D guidelines, that part.
Yeah.
Okay, brilliant. No, that's helpful to know there's no grey areas there. Right, so question. So in the earlier slides, you mentioned that estimating is potentially in scope of R&D. So how does that, because it's a bit more of a technical question, but how would that, how would you actually calculate that, and what proportion of it would be claimable?
So that would be in relation to time spent for people on estimating. Would that be particularly relevant there, Hannah? Is that what we're?
Yeah, I think so. I think you were sort of, referring to, it's almost the work that was undertaken by the whole team. So if you had some estimating part of that, whether it was estimated intervention or otherwise, is that basically that in scope, and would it attract the same level of recovery if you could demonstrate it was in?
Yeah, it makes sense. It's sort of where does the sort of technical challenge around the project start, really? So if we were looking at, and we see this a lot in terms of estimating, tendering, often as part of that tendering, estimating process, a company has to go through an understanding of what the project is, what the challenges are going to be, and not quite fully develop the solutions to them, but certainly get to a point where they can provide some insight on how they would go about providing solutions to any of the parts of the project which perhaps are a bit more unusual. So it's we see a lot of tendering and estimating time able to be looked at and potentially included then in the R&D claims.
Okay, and that presumably will be applicable even if you don't succeed in actually getting the tender. You just you do that upfront work and you've got that planning and that learning, but you never actually get to deploy it in practice. That would still be potentially eligible.
That's it, in exactly the same way as a sort of failed project would be. That time can still certainly qualify.
Brilliant. Okay, so I've got a few on fees now. Oh, actually no, sorry, I've got a couple more coming first. So this one is around timescale. So how many years can a company go back with claims, or how current does the work have to be? Is there some sort of cutoff for each year?
Yeah, there are certain years it follows company taxation rules. So here we have the ability to look back at the last 2 financial years. So just to give you an indication, if your company has a year end, which is the 30th of June, you have another 2 months to make a claim to capture any costs that were in the year that finished on the 30th of June 2018. After the 30th of June 2020, you lose the ability to make an R&D claim for any costs that you incurred in that year.
And that's very clear. Thank you. So there is a little bit of time for sort of retrospective, getting your claims together, which, as you say, might be, perhaps part of the interest in the moment. If you're looking at this from a kind of cash flow point of view, is actually you could backdate to a certain degree some of your work by reassessing what you've done over the last kind of year, 18 months.
Exactly right.
Okay, great. Right, well, we've got so many questions. We're very popular as guests. No, so I've got a question around multiple companies in the supply chain. So how do you avoid double claiming if you're also, perhaps looking at collaborating in terms of your R&D activities on a certain event? How do you unpick that in terms of who gets to claim?
Okay, this is one of the most complex questions that we deal with sort of every day across engineering, architecture, construction in particular. In effect, everyone's a subcontractor somewhere in the chain, and that's where the challenge around identifying who can claim is most prominent. The answer is, as you would expect, that it depends. It depends on the contracts. It depends on who's burdening the risk. It can depend, for example, a factor that can influence things is if there's any IP created, who retains that. There are a range of factors that determine who can make the claim. This is a very, very, very current topic for HMRC as well. We're seeing lots of discussion from HMRC. We're seeing some queries on should the company be entitled to make the claim, and we're also seeing some queries on which scheme the company should be able to claim under if they consider that the work may have been subcontracted to another business. So unfortunately, there's no easy answer, but a very, very sort of important topic to determine up front which company can make a claim, and as well which scheme it should be claiming under.
Okay, no, that's helpful. And I mean, that's part of the benefit, I guess, in not just doing it yourself, is that you won't, if you've got experts such as yourselves who will be able to untangle that, you're not going to be at risk of making inadvertently making a claim that's not valid.
Yeah, really important, really important. We have an advisory practice as well that helps companies who are sort of stuck with an HMRC inquiry, for example. We had a discussion with a civil engineering company yesterday who had this exact question, which was, we've made an R&D claim, the inquiry has been going on for a year, and HMRC are saying to us, you should have made that claim under the other scheme. And so it's a really, really current topic. It's something that you definitely need to get right, but it doesn't prevent, companies making the claim and determining their status correctly. I would suggest with appropriate support.
Yeah. Okay. So sort of follow-on question to that, really. But what can you give us some of the common reasons for rejections of claims? So what's the sort of feedback around how not to do it?
Yep. So I guess the scheme that you're claiming under is really important. We do see some things where HMRC would say you should have claimed under the other scheme. Project boundaries is always something that would crop up in discussions. How have you determined your project boundaries? How have you assessed time spent on projects? We see some basic errors as well, which can be relevant. So, for example, if subcontractors are included as part of the costs in a claim, then there's a statutory restriction that says you can only include a maximum of 65% of those costs within a claim. We see some errors there. We see some errors in categorization of costs. So is someone considered to be a subcontractor for R&D tax purposes, which can be different to the layman's definition of what a subcontractor is, compared to, is someone, for example, considered to be an externally provided worker for R&D tax purposes, which might be more like an agency worker. So there can be a whole range of factors that can be misclassification, it can be quantification, but ultimately where HMRC are asking additional questions on an R&D claim, then those are areas that can be scrutinised.
Okay, no, that's really helpful, thank you. Right, so last couple of questions now, and it's just to, I think, to give people a bit more of an understanding about the fees of employing experts such as yourselves. So appreciate this will be a sort of negotiation on an individual basis, but people are interested in the sort of order of magnitude of engaging a company such as yourself. So someone said that you gave the example of the £50,000 R&D spend, which you think you get sort of £16,000 back, but they were asking about what order of magnitude might the fees take, and some of the principles around how they're calculated. Again, just so I think we can have that transparency of people perhaps wanting to follow up with understanding the expectations of engaging experts such as yourselves.
Yeah, no problem. So I would, and I don't want to be sort of sitting on the fence at all here, Hannah, but I think the answer is that we would assess what support is required as a starting point. And the reason I put it like that is, look, there's some companies who have no experience of making R&D claims whatsoever. There's some companies who have quite significant finance and tax functions in-house, and the level of support that's required is really different. Typically, we would charge a contingent fee based on delivering a successful R&D claim and working with a company throughout the year to improve record keeping processes and so on. But certainly we would have that discussion sort of up front to help understand what support's required and what the costs would then be.
Okay, no, that's fine. And I mean, is there anything that people could look at, just to get a feel for that? I guess there might be things on the website. Or is the best thing is just to have the conversation with you, recognizing that it will have to tailor it to the type of company. But I'm thinking, just for an SME to get an idea, if they know, for that company profile, they know they haven't got any help in house, they know they've never done this before.
Yep.
Is there stuff that they could read up on just to get a feel for how much they might be looking at in terms of fees?
Yeah, I think, Hannah, if people just want to get in touch directly, sort of more than happy to answer any questions on that, because again, it's really useful to understand what's required and where that support would come in and sort of how quickly people are looking for that. So I think, yeah, please do get in touch. Even if it's a sort of brief conversation, more than happy to sort of talk through that on the phone or over email.
Mm-hmm. Okay, no, that's helpful. Thank you. Right. So I think we've exhausted, and we've done very well, to be honest. A barrage of questions there, but I think we've covered everything that everybody has sent in. Obviously, if people have more questions, they can either come through, through the AC, we can pass them on and get you an answer, or when we circulate the details to the attendees, obviously all of your contact details will be on there if they want to pick up directly. And as you say, maybe that sort of for more specific advice on your company or some of your potential claims, then the best thing to do is really to go direct. But plenty of ground covered there. I've certainly learned a lot. I wasn't technical at the start. I'm slightly more technical now, but yeah, brilliant to be able to have such experts on the call and have such good debate and be able to answer those questions. That's probably the best way of showcasing your capability, I'd suggest. So thank you very much for joining us. Just to close out now, to do a bit of a forward look about what else we've got in this series. So next week we've got a webinar with Andy Mitchell, who's the chair of the Construction Leadership Council, who are working on behalf of the sector at the recovery planning. So what can the sector do to help itself pull through the current crisis, and what can the government do to help us? But Equally, just to remind you that all of our webinars, including this one, are available online to play back, and you can circulate them as well. So, you know, if this has prompted some things you might want to take up with your business, then please do, you know, circulate the link to the recording of this. It'll be there as a resource for all of you to use. So that was it really from me in terms of the webinars, today's webinar. Very interesting, really good debate, lots of fantastic questions. Thank you very much for joining us, and I look forward to seeing you all again soon. Thanks, everybody.
Thanks, Hannah.
Thank you. Thanks.